Hi, this is Dave Johnson with Day Trade the Markets. And you can see here that I've placed a sell limit, or I'm sorry, a sell stop order at 44.54 to enter a short trade should the crude oil here make a new low for the day. And the reason I'm doing that is that the market has had a weak opening, so I can kind of squeeze this in a little bit and take a look here at the lay of the land kind of thing. Let's have the past couple days. So you can see here that the market had, this is back here, let me just get the arrow. We had a really good down day here on Thursday, and then Friday it turned around, tried to get up. We had an area at 46.22. We were in the webinar with the members on Friday saying that that was a resistance area. The market kind of topped out there and then sold off overnight here. Going into today's trade as well. So what I like to see when the market has some bearishness to it is when you have a probe higher that gets rejected. Now we've had this probe, it came back and found some support, but you can see the pair of green bars here, which is our second strongest aggression bars. That low has been taken out, and we've also just had a pop up here, and that low has been taken out. So that's good capping on the part of these sellers, I would say. In other words, sellers are coming in as the market is trying to move higher. So I'm just going to get this, I'll maybe make that just a hair thicker so we can see it more easily. I'm going to go ahead and put that right at the low of this green pair of green bars right here. So we're trading below it. It popped up above it and came back down. And that's really going to be, as long as it continues to hold below there, it continues to, in my opinion, inform us that this buying has been exhausted, and that we could very well, as a result, not just get in long liquidation, but we could also get new selling come in. We don't really have that yet, but there's certainly a possibility for that. If the market should make a new low, we could certainly have that. So as you can see, I'm just going to mark in here. The low of that first green bar is at 67. So I'm also going to put an order in here at 66. So I'm going to sell limit 4 at 66. And we've also got our sell stop in at 54. So you can see here, I'll just mark this in as well. You can see here that this was yesterday's low at 45.15. So we'll go ahead and mark that in. And so far we've rallied up to here. So the high today is at 45.02, so 2 to 15. So a 13-point gap in the market in this area up in here. I'll just kind of highlight that a little bit. So we are dealing with a selling gap today, and we've had exhaustion on the part of the buyers, in my opinion, because of this buying here, and now the market holding below it. We've also had a probe up above there that has been nicely rejected. Its low got taken out right away. So we've got two orders in here. We're trying to sell one just below the low of this first pair of green bars, and should the market make a new low for the day. Now, what I'm also going to do is these markets can move pretty quickly if they get going, especially the crude, as we know. If it makes a new low, it can shoot down pretty darn quickly. So 54, I'm going to go ahead, and you can see that the market over here, this is on Friday when it dipped down, made a new low to here, and came up pretty quickly. So that area where it got rejected from, roughly down in this area in here around 39, I'm going to go ahead and put an order in there to buy limit 2. So in other words, if we do get filled on our sell stop here, then we've got an order in at least to offset 2 of the contracts or 15 tick profit. So that's kind of the lay of the land right now as I see it. And the protective stop that I'm going to put in is just above this excess high. I'm calling it right here. And I'll just make a notation. The high of that is at 73. So I'm going to go ahead, we're not in yet in any trade, so I'm going to put a protective buy stop in at 76, 3 ticks above that. So we have our buy stop in at 76. We have our sell limit in at 66. So let's just see if we can get filled. Now that you got a lay of the land a little bit more, I'm also going to go ahead and just put in a marker here so we know where Friday's low is, because that's a natural target as well. And then I can kind of spread this chart out a little bit more maybe we can see detail a little bit better. So you can see the market did come up here, just hit us a moment ago at our attempted fill here at this blue line should come down just a hair, because I think the low of that first green one, if I recall, was 67. Yeah, so we've got our limit to sell at 66. Let's see if we can get filled. It's hitting it right now, and we've got our 10-tick stop in here with a buy stop at 76. So hopefully we can get filled right now, and it can start to sell off and maybe even get filled more should the market go down and make new lows for the day. So it's hit our price a couple of times there. No fill yet, so I think I think it's a good entry price, and we'll just leave it from there. I'm going to try and keep this recording relatively short, and now that we know the lay of the land, we've got our several orders in place. We'll just leave it like that. I'm going to pause the recording, and I'll pick it up as the market dictates. Okay, just restarted the recording. We have just been filled on this order, so just want to bring you up to date on that. We do have our protected buy stop just above the market here, so we'll see if we can get a turnaround here as I'm expecting, and hopefully new lows. Now, if the market does turn and come lower, I'm going to go ahead and increase this to 4 contracts here, because if the market does come down and make a new lower, we'll get short another 4. Then I'd want to buy 4 back down here, half of that position should it occur. But we do have protected buy stop in for right now on this short position that we've just taken. So I'll go ahead and pause the recording and pick it up when needed. Okay, just restarted the recording. You can see that we did peak out here, and we've come down and have been filled on our second position. Okay, and we've reached our first profit target too. So I'm just going to make a marker on here. We exited that at 39, so I'm just going to make a marker right here so we know where we are with that. The stop here, this is likely to be a pretty aggressive bar on the sell side, either a red, possibly a magenta. We're going to know here, these are 2-minute bars, of course, so we're not going to know for a little bit of time. I have a line here down at 44.20 as the next target. What I will do, though, first of all, is lower this stop, and I'm going to bring it, you can see here that we had this earlier low here, and that was at 55.44. Okay, here we've got our bar in place, so magenta bar. So it's certainly possible that the market come up and test towards the high of here. So I'm going to go ahead and put in my stop for now, just a tick above the high of this. So I'll just mark on here the high, or identify the high on that magenta at 44.62. So I'm just going to put it at 63. Okay, so we're only risking 4 ticks now. Now our what I should also do here is just put on a marker. Our average entry price now is at 59. So I'll just use one of these markers here, a line. So this is our average price, because of course we got filled short up here at 66. So this was our first entry right in here. We wanted to get in just below that blue line, if you remember. So that was our first entry there. Maybe if I just make this I don't know, maybe if I make it like a bright green or something, maybe that'll, yeah, I'll choose this here so we can see that right there. So that was the first entry that we got, and then of course when the market came down and made a new low, that was our second entry here. So just identify those individual entries, and of course our average entry price now is at 44.59 right here. So I'm going to want to try and bring this stop down a little bit more as soon as I can. I'm going to have to wait a little bit of time, because generally when we've got some pretty good selling in here, unless it's super bearish, it has a sort of a reaction bounce to it, and we do know that we've got a potential area of support down there roughly at 20, and the only reason I've got that in there is that was last week's low, so it's not like it's it was a fairly good support off of Friday, because on Friday it dipped down there and was quickly rejected, and that's, if you recall, why I wanted to get an entry here, or sorry, an exit here fairly close to that, which gave us a reasonable profit. So at any rate, you know, we want to keep our eye on this as far as the next target is concerned. Now that it's stayed down here, and you can see that the market has, right now we're about 30 ticks or so to the good. At this point, I really don't want to see it come back up and stop us for a slight loss on the second half of the position. So I'm just going to bring this stop down into here, just a tick above the previous low, which is at 55 here. So I got the protective buy stop at 56 with our entry at 59. So and the other thing I'm considering doing here in a moment is exiting part of this position at this known area of support. So I'm going to go ahead and I'm going to put in a buy limit. We're going to buy it just above in here. So I'll put an order in at, let's say, 25. It's at 24. I've got it at, actually. So we'll see if we can do something with that. Because it is so close to this area of likely support, I think it's probably a good idea that we exit at least part of the position here. Let's just see, it's sort of bouncing around a little bit. We'll go ahead and exit this thing here. Okay, we're filled at 26 on that one. So a few ticks above our target, but that's okay. So I'm just going to mark in that right here at 26. So we're now down to 2 contracts, so I want to adjust that. There we go there. So our average entry, of course, is at 59. So I think on, okay, so now you can see that the market has produced what we call a high velocity move. And because when we're looking at the market, when it has some good vertical moves, they tend to then define the market's condition. And when we have a good vertical move like that, we're not only looking at the speed of the market, but the relative aggression of the market. And of course, the relative aggression is how the market actually moves up or down. These are not with limit orders, but they're with market orders, either at the bid or the ask. So, and that's when those orders are filled, that's the level of aggression that we're looking at. So it certainly is possible that the market here, you can see that this wave of selling that started in here, let's see, roughly at around 63, it came down here and hit 19. Okay, so that's pretty good. I mean, that's about 40 ticks. So it's certainly possible for it to bounce about halfway. And so, to get up here into somewhere into this, where this single bar is, and, nothing on either side of it, it could, pop up into this area in here quite easily. So I think that's why I want to go ahead and leave the stop where it is right now. The other thing, I can't remember if I did that, but just be on the safe side, I'm going to just put a marker in here at 59. I think actually I did that, but we've got another one. We know what our average price is here, and of course these green arrows, and I'll just make those a bit bigger so we can, kind of see those maybe a little bit better. These were our 2 entry prices, so just, keep tabs of this exact trade and what we're doing here. So anyway, I'm trying to keep this video recording length, as short as possible. We've got our stop in place. I'm fairly lenient with this stop now because, we had 8 contracts in there. We've exited 6 of them. And so I want to try and allow, so in other words, we've got a nice profit in this trade. So I want to try and allow this market to really unfold on the sell side as much as I possibly can. And so I'm going to give the stop, the protective buy stop on the remaining portion of this short trade, as much room to give and take as possible in the natural give and take of the auction. So that's why I've got it, relatively high, up there at 56. We're short from, well, we're on side about 30 ticks on this, short at 59 to 29. So under regular circumstances, if you will, in other words, if I just been in the trade and it had moved or something, I would adjust that. But I don't want this market to kind of spike high and get me stopped out and then send on down again. In other words, it could possibly form another little spike like this and then come down. This one here, if it were to form a spike like that, I don't want to get stopped out because I've got my protective buy stop here, and then for just to turn around and start to sell off again. So at any rate, that's the lay of the land right now. I will go ahead and pause this recording and pick it up as the market dictates. Okay, just restarted the recording here. The market has come up as we suspected it might and test into this magenta bar here. We do have a green bar here, but you can see the very next bar here has a triangle on top of it, which means the buying is decelerated, which is our expectation that the low of this bar will get taken out, that we do have some capping effect in here. In other words, the sellers have stepped in and restricted the buyers from moving the market any higher. So I really, as a result of this, I really don't want the market to move above this area here, this probe higher. And I'll just make a marker here. That's at 44.46 is the high of this bar right here. So I'm now going to adjust the stop down to 44.47. I just put one tick above, and that'll lock in 12 ticks should we get stopped on this final position here. So just wanted to bring you up to date on that adjustment. I do not have any other buy orders in here. We've had good profit on the first 6 contracts on this trade. Of course, just to remind you, we did enter it twice here with these 2 green arrows. Those are our 2 entry prices, and right here is our average entry on this short trade. So I'm just going to leave it like that for the time being. And I'll pause the recording once again and pick it up when needed. Okay, just started the recording. I'll move this over here. We just got stopped at 47, and if you remember, we were short from up here at 59, so 12 ticks on that. I want to head over here in the meantime and produce this, just a synopsis of what the trade entailed, the results of it. We had the 8 contracts, so you see we exited 4 at 20 ticks. We exited 2 at 33, 2 at 12, for a total of 170 ticks on the 8 contracts. So just a synopsis there of that trade today in the crude. And for those of you not all that familiar with trading the crude, it is $10 per tick on the contract here when you're trading the crude. So that's 170 ticks that we made times the $10, so $1,700 trade. So good trade for today, which really wasn't all that challenging in the sense that we did have a nice gap opening lower. The market went up and could not close the gap. It then accepted price below where the last movement of aggression took place to the upside. This is when we got short, where I put those 2 green arrows right there. We had 2 places. As a matter of fact, we got short right here at 66, which was 1 tick below the low of this pair of green bars right here. And then we also got short right here when the market made a new low. When the market came up here, I'll just make a note of that. You can see here that I think it was 69 that it got to. Yeah, 44.69 was the high right here, and we were short from 66. So it really worked out well. We also had working in our favor this spike up here, which is really rejection of higher prices as the market tried to move back up above the low of this green, and then we got the acceptance here, and then the nice break lower. So, and we also had this objective down in here, which is why we exited here. I think we got filled at 26 on this occasion right here. I think I initially put it a little bit lower, and then it started to bounce around, so I just got out at 26, knowing that we were going to likely have some sort of bounce, maybe support in the 20 area, and as it's turned out, it has held. As a matter of fact, that I think that what did it get down to 19, and I actually had this at 21. So yeah, just took it up by a couple of ticks. So so it's a good way to use this software to identify not only the trade entry locations, but where some good profit potential lies, so that you know where to take some profits, because obviously that's a very, very critical part of trading. You not only want to know when to get in, but you want to know when to get out. So anyway, there's a look at this trade for today. Thanks so much for watching. I know the video went kind of long because there's a lot to be said about the trade, and had some interesting points to it. So any questions or comments, just get a hold of us at info@daytradethemarkets.com, and I hope you enjoyed it.